Ladies and gentlemen, good day and welcome to the Q2 FY2024 earnings conference call of Coal India, hosted by Antique Stock Broking. There will be an opportunity for you to ask questions after the presentation concludes. I now hand the conference over to Mr. Rohit Natarajan from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Zico. Good evening all, and thanks for logging in the call. We are pleased to host Shri T. M. Prasad, Chairman CIL, for the investor call post Q2 FY2024 earnings and to discuss his views on the coal sector. Along with him, we have Shri Debashish Nanda, Director Business Development and Director Finance, Additional Charge, Shri Mukesh Chaudhary, Director Marketing, Shri S.K. Mehta, CFO ED Finance, Shri B.P. Dubey, Company Secretary. Now I hand over the call to Shri B.P. Dubey, Company Secretary CIL. Over to you, sir.
Thank you, Mr. Natarajan. I extend a warm welcome to all the participants in the conference call, sir. The top management led by Shri T. M. Prasad is there to address all the questions, sir. The corporate presentation is in NSE and BSE website and also the website of Coal India Limited. The call is expected duration around 1 hour. I request all the participants to kindly adhere to the timeline. I request Mr. Natarajan to kindly, before the meeting, so I request Chairman for his opening remarks.
Mr. Natarajan and all the participants joined. Very good evening, and we welcome from Coal India, and we are ready, and whatever queries we are ready to answer, and with encouraging H1 results in coal production, dispatches, and overburden removal, and overall dispatches, and also to powerhouses. Almost as per schedule, we are going Q1 and Q2. Now H1 is completed. Even month of November, October and November, Q3 is also as per schedule we are going, and as per the target of 780 billion tons this year, we are progressing. So over to you. We can.
Mr. Natarajan, you can formally start the Q&A sessions. I request participants kindly to do them one by one. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use answers while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Good evening, everyone, and thanks for taking my question, sir. Congratulations for a good set of numbers. I have 2 questions. The first one, if I look at the subsidiary-wise volume for this year, so until October, what we have seen that MCL volumes have remained quite flat. I would say 1% growth YTD October. Now, just wanted to understand what is going on over there with MCL, what was something that showed very good growth over the past 2 years. So have we hit a plateau or something, or what kind of long-term growth plans you have for this subsidiary? Also, if you could highlight the incremental volume growth for BCCL, that would be great. This is my first question, sir.
Number one, in MCL, there was a land issue in one of the fields, Vasundhara coal field. From July 2nd to almost July 27th, almost 26 days, that field was stopped by villagers in demand of higher compensation of the land and other things, employment. We are immediately, from 2nd to 3rd, it was flagged to Chief Secretary Varisha and Ministry of Coal, but somehow it was almost 3.5 weeks it has taken to settle. And but Team MCL and Team Coal India is quite sure that target of 204 million will be achieved. And MCL initially it was lagging even in August, September, but now it is turnaround, and the company is in growth trajectory, and we are pretty sure that it will do 204 million. There is no doubt. Number one. Number two, overburden, it is doing well. And other land issues, small issues, we are taking care. In case of BCCL, yes, it is in last 2 years, it is also stellar growth in the company, 36.18 last year, and 41 million this year we have to do, and with a growth of 11%. It is quite on course. There is right from first month onwards, BCCL in steady growth. And BCCL will achieve all the 3 parameters: production, dispatches to railway sector, power plants, and also OBR. All 3 it is going well.
So basically you mentioned 41 million tons of target for the year.
Yes.
Okay. So the second question is on e-auction. So what is our targeted e-auction volume for the second half of the year? And if you could highlight the latest e-auction premium over notified price that is currently going on an average.
90%. 10%.
It is percentage of premium over notified price. It is 90% at overall as a whole, India as a whole. In BCCL it is 56, ECL 71, CCL 114, NCL 114, Mahanadi 107. It is almost 90% the premium over 90 notified price. Whereas quantity offered in that, whatever we offer, about 51 million, 45.6 million was booked. So, primarily we have to supply these power plants and then we have to balance this e-auction. Both goes together. In power plant, we are supposed to give 6 and 10 million. We are quite sure that we will be committing and we will be fulfilling 6 and 10 million. And after that, this e-auction and other than that, supplies to SAIL and also we are taking. Okay, good.
So what do you expect e-auction volume to be for second half of the year?
15% of production you can say.
15% of production. Okay. And the current e-auction premium you are saying is 90%.
90%.
Okay, fine, sir. And thanks a lot. I will come back with you. All the best. Thanks.
Thank you. Next question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good evening, sir. Just had a couple of questions. Firstly, on the e-auction premium, which you mentioned about 90%, it has been a little volatile where it went to around 60% in a few months back. So how do we see the e-auction premiums moving ahead for this financial year?
Right now it is moving ahead quite well, but it depends on many factors. One is demand, number 2 is our international prices, markets, import quantities. But as of now, the demand is there, and we are quite sure the price consideration of imports is also being taken care. We are looking into that also. But quantities are almost being booked.
Got it. And sir, this offtake has been pretty robust this year. So could you just comment on how the demand is right now in the last couple of months? How is it? Is the momentum continuing or any change you have seen in the demand pattern from across the end-use segments?
It is in October alone, 33% coal-based power growth is there. And it is, but for sure, till monsoon it will continue. The way the demand and railways, power sector and our coal sector being carried up, almost weekly, twice or thrice, these subgroup meetings are being held regularly to monitor that there is no shortage on account of coal supplies. And we are taking care and almost it is every week, at least twice or thrice, the subgroup with all the 3 ministries, it is being taken care.
Got it, sir. So just one last question. You actually mentioned about the e-auction volume for second half. So that you mentioned is for the second half, right?
Yes, H2.
Okay. That's all from my side. Thank you all the best, sir.
Thank you. Next question is from the line of Digant Haria from Green Edge Wealth. Please go ahead.
Hi, thank you for giving me the opportunity. So my question is, so that last time in the call, you said that, the improved profitability that we are seeing over last 4-5 quarters is not because of abnormal profits on e-auction, but it is because of efficiency in the whole Coal India ecosystem. So if you can just elaborate more, is this efficiency just coming out of the lower employee cost, or is our mining operation getting more and more efficient? And how much more can we get out of just this efficiency part? That's my question one, sir.
In the case of explosives and diesel, we are incurring less cost compared to previous year. This is one thing. Employee cost, though there is a wage revision is there, that we have taken into consideration. But other factors, it is being curtailed. And employee overall manpower, we are having a slight reduction. Now the sales wages is there, but the other factors like sales realization, it is there. And cost per ton, there is no much increase, rather it is decrease of 1%, cost per ton produced. Volumes, since volumes are increased, both in case of dispatches, so sales realization is being done, and the overall production. So that our stocks are also improving at our end. Recently, last 15 days trend, in this month particularly, about 3 million plus power plant side also, coal stocks are also being increased.
Okay, sir. Sir, and second question was that, if we do reach our, target of, 1,000 million by, in the next 2-3 years, do you see that there will be enough demand for so much coal in India itself, or we'll also have to look for more routes like export or something?
Enough coal for this up to 2030. There is no doubts. Future is very secure and there is a heavy demand.
Sir, so basically whatever we can mine, we can sell. That is what you are trying to say, right?
Next 6 to 7 years, absolute, there is no issue. Rather, I will say it is up to 2040 also, but immediately we will keep up to 2030 the projections. Next 6 to 7 years.
Okay. Sir, and lastly, do we see this 1,000 million target by March 26, March 27? Where do we see this, our company reaching this goal?
Yes, we are progressing. Last year, 622 to 703 we are there. And again in this year, 44 million in 7.5-8 months it is, we are witnessing. So 780. So next year it is 850. So incrementally we are going 7%.
Right. Okay, sir. All the best. Thank you.
Thank you.
Thank you. Our next question is from the line of Hardik Jain from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. Sir, now we have two subsidiaries, CIL Solar PV Limited and CIL Navikarniya Urja Limited. So how much capital are we planning to infuse in these subsidiaries over the next 2 to 3 years? And what are our CapEx plans there over the next 2 to 3 years in these two subsidiaries?
Much is being increased because this is in a solar we are entering. Basically, our net zero is we have to go pay 3,000 megawatts. So by this year end, 250 megawatt we will be doing out of this 3,000. And one we have given in Gujarat 100 megawatt, and one in Rajasthan we are in discussions, but due to elections last 2-3 months it is getting delayed. There about 1190 megawatt we are in discussion, and 900 megawatt they already agreed if we install at 2.64 So it is in different stages, and identification of land banks in especially 300 acres at 2 places in WCL and few places in SCCL, and floating solar with UPRVNL in this Rihand Dam. Similarly, one place in Hirakud also we are in talks with Orissa. So we are in different stages of planning and we will be increasing. So capex as a whole, it is 16,500 crores. But with these two subsidies, since in the last 3 years only we have started this solar, we will be going in a phased manner.
Okay, so this say over the next 4 to 5 years, if we have to do this 3,000 megawatt solar projects into two subsidiaries, which will be broadly around 15,000 to 80,000 crores just in solar, where equity contribution will be around say 30%, 5,000, 6,000, 7,000 crores, and rest will be, I think, subsidiaries will take the debt for the capex, right?
No, it's not exactly subsidies. First we will get the orders. Coal India as a whole, I told 16,500 crores is this year's CapEx. In this, maybe as a whole, if you see, maybe 500, 600 crores as we ramp up the solar, that we will take care of this CapEx.
Right. Okay. And sir, in the annual report, you mentioned that our production target for FY25 is 840 million tons. So for next year, what will be our FSA commitment? So what I understand is as we incrementally increase our production, our proportion of e-auction will increase, or our quantity of e-auction, the quantity that we offer for e-auction should increase over and above our FSA commitment.
Yes. It is going to increase 10 to 15 to 20% range. It will be there. So that we have to first fulfill parallelly the commitments of our sector, and parallelly we will see this 15 to 20% range.
Yeah. So you mentioned that our FSA commitment for this year is say 610 million ton, which may increase a little bit next year. So if next year we produce 840 million ton, so our e-auction volume can increase in a good way, right?
It will increase. It will increase in the same pro rata percentage, 15 to 20%.
And government recently, we read in newspapers, they want to mine other metals like lithium, cobalt, and other rare earth minerals. So how do you see this opportunity for Coal India, and are we doing anything to tap this opportunity?
There are plenty of opportunities. This is a new field. Our team is also visited twice to Australia. Dr. BD and the team has visited. And that is at different stages. One is fully explored, that the critical minerals, others is to be explored, and entirely greenfield. So the opportunities are there. Due diligence is being done at our level.
Okay. And so as we increase our production, most of this increment will be contributed by open cast mining, or we'll have to do underground mining also as we move forward and increase our production?
At present, our underground share is very less, 25 million ton only. So there is a target of increasing from this 25 million ton to 100 million ton by 2030. So we are focusing on underground, especially with the continuous miners, this mass production technology, increase in mass production technology, so that much portion, environmental angle also is taken care.
But the cost, what would be the cost difference in, versus open cast mining versus underground mining?
Cost difference is definitely there. If it is 1,000 tons, our cost of production, if it is open cast, 800 to, and then underground maybe 2,100, 2,200. But we have to see the deposits have to be done by underground only. There is initially our mechanization was a little lagging. But now with the mass production technology, with continuous miners, few mines like Janjra and this Monidi, similarly in SCCL, few mines are there, continuous miner, and Churi underground. One single continuous miner is also doing at least 7 lakh tons per annum. And with the proper care to environment, where the dust pollutions are less, the land degradation is almost nil, zero.
Right. The last question is, now we have already started doing e-auction on our own platform, coaleauction.co.in. So going forward, we'll do all our e-auctions on our own platform, or we'll be using third-party platforms from companies like MSTC?
We are using our platform, and we are going to be independent on that. Partly MSTC, right now we are taking their help, but we are also developing from CMCDL, our branch area. Okay. Next year we will be phasing out.
Okay. Thank you, sir. Thank you.
Our next question is from the line of Ashish Kejriwal from Nuvama Wealth Management. Please go ahead.
Yeah, hi, good evening, everyone. Thanks for organizing this call. It's really appreciated. A few questions from my side. You have mentioned about volume target, which is something like 12% YOY growth. So you are talking about, first of all, it's a target or off-take target? Because YTD we have seen off-take increasing by just 9.5%. So, and now the base will also increase from November onwards. So the similar increase also seems to be difficult. Then what would be our realistic volume targets for this year? That's my first question.
volume target-wise, target is 780 million ton production, 780 million ton dispatch also we are supposed to do. But till now, production achievement is around 2% and uptake is 9% only, as you have rightly seen and noticed. Because of the rainy season, it will be generally July, August, September, there will be little less. Right now we are picking up and almost the festival season is almost end. And only there is no distractions. The volumes of dispatches is also going to pick up, and it is being picked up in MCL, SCCL, where the high volume of dispatches is expected. We are right now picking it, and we will be achieving our dispatches target also.
The reason being why I'm saying so, because on an average also, on a month we can do 65 million ton, maybe in a month. And if I do that calculation, our growth rate, because of the high base of last year, it should come down to 5 to 6%, rather than 10 or 12%, which is required at least. So that's why, what could be the probable or a realistic target which we can achieve by looking at the monthly run rate which we have achieved so far?
First thing you have to understand, this dispatch target, it depends on other factors also, other power plants lifting from our side, other than the railways. In railway end, at two areas, in Concall district, in SCCL, mega projects are there, and Mahanadi, there is a little shortage of racks on a daily basis. Even in rainy season, we are supposed to load the number of racks. We are getting in both this coal field only, 5 racks less. So every day loss is a loss at that particular place. However, in CCL, BCCL, ECL, NCL, from railways end, there is no issue. Only at two fields in CCL, MCL, there is an issue. But it will be picking up. And overall, if you do, say, 67, 65, even by your understanding also, if we can, stock will be increased at our end. Right now it is 41 million. Last year it has went up to almost 65 to 69 million. Now it is 41. So this 30 million, even if it ends, it builds up at our end. And power plant side also it is 20 million right now. Our target is to build there also at around 38 million. If we are there at 38 million, so at least 18 to 19 days, 20 days stock will be there. So in any case, first volumes has to move from the ground to surface, and vis-a-vis from there to power plants, and we should focus, and we will focus.
Sure. So the second question is, on the basis of the current evacuation facility, how much maximum we can sell?
Evacuation facility, I am just telling you, in 3-4 subsidies as such, there is a facility wise, there is no issue. Just CCL, I am just telling an example, Tori Shupur line, second line has been commissioned, third line is also going to be commissioned. There, the company is doing 84 million, but we have developed at least 110 million evacuation facility. Whereas in some subsidies, little less. So, almost we will be targeting right now about 320 racks per day. So, it will be gradually, we will be touching up to 330, 340 racks. Evacuation, wherever it is less, even CERL, one line at Raigad, which has been recently commissioned by Honorable PM has also inaugurated. Similarly, the third line is also being commissioned. In Jharsuguda, Pali, MCL, one line is being under construction. Similarly, CEWL, Chhattisgarh East-West CEWRL. So different railway lines under different subsidies are also under construction. And 1BT, to achieve these railway connections and other railway sidings and FMCs, almost all parallel activities are being undertaken. That also yearly target, quarterly and half-yearly target development activities is also being monitored. If those are taken care, this evacuation-wise, there will not be any problem.
Okay. So, sir, to sum it up, I think from the evacuation side, if demand persists, we can do 780 as well as 840 also next year. Okay?
Definitely.
Okay. The second question is on the employee cost. Though we have already renegotiated and everything has been more or less done, but there was some issue on account of officers and non-officers. So first of all, the status of that, and secondly, is it possible to guide us on the total employee cost which one can expect this year?
about
It will be 46%.
46%.
46,000 crore.
46,000 crore, and percentage-wise also 40% over.
Less than last year.
So employee cost-wise, there is no issue with growing volumes and that is a settled thing. That is a internal, there was some circular, some conflict is there, but that is being taken care of, and we are also addressing this. So 46,000 crore is the employee cost of the total volume. 23.
That's great. Lastly, while we are doing fantastic in terms of first mile project, we are investing close to 25,000 crore in that. So though it is beneficial from the environmental side as well as increasing the evacuation facility properly, but is it possible to share some kind of saving in terms of numbers, what we can earn, or what kind of payback period we can have this investment of 25,000 crore?
24,700 crores in a 6 to 7 years period. Right now, we are having an installed capacity of 228 million, and every year it will be adding. National Environmental Engineering Research Institute of Nagpur has done the study in two projects. One is in Kusmunda and one is in Lingaj. In both the fields, only two projects after the commissioning, we are saving in one project 25 crores and another project 50 crores for 1 year only. More than that, the dust emissions and NOx, both nitrous and other carbon emissions, there was controlled, it was reduced by 75%. That is a huge. So it is not that only capex recovery or this thing, but these environmental factors play a greater role. So in each area, whenever this density is reduced, number one, safety is increased, and this dust pollution and other diesel savings, everything is there. So payback period-wise, parallelly, every 6 months, 3 months, it will be the whatever cost we are incurring, it will be recovered, and it will help not only environmental, safety-wise also it is increasing. So there is a dense population is also going through. So the CHPs are coming nearer, track lanes are coming nearer. So safety aspect other than environmental also comes into the picture.
Thank you, sir. Thank you so much, and all the best for all the things we are doing.
Thank you.
Thank you. Our next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you for giving this opportunity. One question coming back to the evacuation capacity. If we look at the 840 million ton production target for next year and the current evacuation capacity, where are the subsidiaries where we will need evacuation capacity increase to deliver on the next year's target?
Primarily it is the MCL and SECL. SECL also we are focusing on in both the field. At least there is a need for the increase of 40 to 50 racks. One portion of MCL is the Jharsuguda, Barpalli, Sardega, initially with 2 sidings we have started. One more siding is being added, and one more from Garden Ridge. There is one more Lekara siding. We are taking that siding around 4 racks. 4 racks means 4 million. If we add 50 racks in a subsidiary, almost it is 50 million ton. So Jharsuguda, Barpalli, that side of Valley Coalfield, we will be targeting about 25 to 35 million, and similarly in the Kaltam side also another 15-20 million. And silos are also being commissioned. First mile connectivity. Once this is commissioned, the rack loading time from 3.5 to 4 hours, it will be reduced to 45 minutes. Turnover of the racks will also be increased. Similarly in SECL also, there is first mile connectivity projects are under execution. Similarly, CERL, as I told, in Raigad coalfield, there will be an increase there about 10 to 15 million. Similarly, CRWL, the East-West Railway Corridor, that will also take 1 more year. And with that, this 1 BT also it will be taken care. If that company SECL, this year it is 197 million. Next year if it is 220, after that 25-26 it is almost 250-260. So next 50 to 60 million growth in both the companies are being taken care of this construction of these railway lines, silos, and belt conveyors. So in one project, Ingula, there is a belt conveyor is under construction. There is a belt conveyor, completely eliminating the belt conveyor to silo loading, around 5-6 kilometers. Similar other MGRs, these are in place.
Thank you, sir, for this color. One more question about the MDO operations that we have started. So we have started projection at 3 projects at this point of time. So what is the production run rate that we are achieving? And what will be the exit rate from the MDO production by the end of this year and the next year?
Well, the total 15 projects in the last 1 year period we have envisaged. Out of 15, there are open cast and underground mixed. One project, CRML, has started production. Subhadra awarded stage 1. Even just by simply awarding MDO also does not serve that we should get ECFC. So one underground project of SCCL, MDO has started. One in open cast of this we have started in CRML in MCL. Similarly, under execution, 2 mines in CCL. One is KBP mine. Stage 1 clearance we have got, environment clearance we have got. Maybe by next year, it will start a marginal production of 1 million for 25, FY25. But 25-26, that KBP, similarly Chandragupta, we are almost EC one-time hearing is done, and FC, it is in MOEF office pending. So maybe in another 8 to 10 months, another 4-5 MDOs will start operating. So an incremental from these MDOs in 24-25, maybe about 20-25 million. 25-26, but for sure it will be around 60 million. 55 to 60.
Thank you, sir, for this color. I'll get back in the queue.
Thank you. Next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah. Good evening, sir. Can you give me...
Sorry to interrupt, sir. Maybe request you to use your handset. You are not audible, sir.
Is it better now?
Slightly, sir. If you could speak a little louder.
Yes, I am going to speak louder. So I just want to know the split of the dispatches in first of FY24 between power sector and non-power sector.
Total, our H1 offtake is 360 million ton, 360.66, and power sector is 295.36, around 80%. 60 million is has gone to non-power.
Okay, so around 80% of e-auction would also be roughly to power sector?
E-auction is fully non-power.
Okay, so e-auction volume of around 32 million tons in 1H is fully non-power?
The power can participate, but generally it is non-power.
Okay. What is our dispatch target for FY25, sir?
FY25 it is around 850.
Okay.
Whatever we are producing, we are keeping that much. Maybe production at some point of view in February, March, it is more. At that time, there may be adding of the stocks, about slightly 10 million, 15 million, maybe less dispatches. But it will be adding our stocks, and that will take care in monsoon.
Okay. My next question is on the CapEx. So this 16,500 crores CapEx. Can you give us a list of what is the end use of this CapEx broadly? Like how much goes to equipment, how much goes to non-equipment, and within equipment, what are the main equipments that we are buying?
It is total 16 out of 16,500. One is one major head is land. Other than land, there is this FMC projects are there. What there equipments we are going to buy. But HEMM under the head of HEMM and some E&M and this other construction activities of power lines, substations. But primarily these are distributed to the major heads of land, FMC, watchways, infrastructure development, and railway projects. Of this railway we are doing on deposit schemes are also. It is directly deposit, and another is JV route, subsidy of railway, either IRCON or rights, primarily IRCON, along with the state government local and subsidy company. And other than this, solar project, and this power plant, one power plant we are going to MPPL. That also in this 16,500 it is being incurred, and few diversification projects like HURL and TFL. Culture fertilizers and HURL.
Can you give a split of land and equipment alone in the 16,500, sir?
Land is about 2,000 to 2,500 crores. It is as per the demand. If sometimes if the land acquisition 4,000, last year it is 4,000. Last year 18,000, it is around 4,000. This time it is 3,000, 3,500 we are anticipating.
And equipment, sir?
Equipment this year it is not much. This year it is other activities are much. But otherwise it is also around 1,500. This year it is less. It is 2,000. 1965 equipment.
Okay. My final question is on the employee cost. Of course, we took the last revision in FY23. Can you refresh us basically on when is the next revision is due for the non-executive and the executive cadre?
Non-executive is 26, executive cadre is 27.
Okay. Thank you so much. All the best.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. Next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations for very good set of numbers. So on slide 16, if I see MCL and NCL, we are producing very high production with less number of employees. So why this cannot be applied to other subsidiaries? So what is the reason for that? In MCL, we have produced 89.4 with 21,523 employees.
MCL has farmed out in 1992. It was farmed out from SCCL, coalfield, and Talcher is from petrol coalfields. Relatively new mines, open cast mines, tipping ratio is very less. The overburden and coal, the ratio is very less. And the number of underground mines is only 2 to 3 are operational. Whereas if you see in SCCL, the number of underground mines may be 30. Even in ECL, it is around 30, 35. So underground, old manpower is there. So we cannot just get rid of them. So as a company, we are having a policy. Right now, it is 2,30,000 employees strength. In a 5 to 10 year period, almost every year 5% is being the attrition, as with this natural retirements and other things. So SCCL, WCL, ECL, BCCL, it is manpower-wise high. So overall, it is 2,30,000. So NCL is the lowest, maybe around 15,500, and the next is Mahanadi. So Mahanadi, the overburden is very less, the less cover, and number of mines are very limited, highly productive mines. And mostly are output.
My second question is regarding volume of washed coal. So over next 2-3 years, what kind of increment we can see in the volume of washed coal?
Non-coking coal, next 2 years, 10 million ton we are adding in Lakhanpur. It is under a trial run. Immediately it will come up. This 10 million is straight is being added. In coking coal, both in BCCL and CCL, BCCL it will be added, and almost 2 to 3 washeries have come up, and they will be significantly increasing year on year. And in CCL, we have just awarded. It will take 2 to 3 years. FY2026-24, it will be added. The construction period is 2 to 3 years. And both BCCL and CCL, in a phased manner, about 7 to 8 washeries, coking coal washeries are being added. So the moment it is done, it will be producing.
So every year, what type of volume increase we can see in million tons?
You in coking coal, last 2 years is the incremental of 20%, it is already there. And next 2 to 3 years also, you can predict that 20 to 30% coking coal washeries, it will be added. And in non-coking coal, only one washery at Ashoka Pipavav in CCL is under implementation, under operation. Now this Lakhanpur 10 million ton washery is being added. This 10 million is slightly, it will be added to the non-coking coal also from this year. This year it may be balance months, maybe 2 million, but from next year it will be 10 million.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. Our next question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
Yes, my question is a lot. Thank you.
Thank you. Our next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah. Hi. Thanks for the opportunity again. I have 2 questions. The first one is on the possible FSA price hike. Traditionally, we have seen that the FSA price hike given to us is just enough to cover the rate cost, but it was not so this time around. Now, since e-auction premium have also come off from that time, so do we expect to get some additional FSA price hike anytime soon?
So, exactly not. Right now, it is near future, we are not seeing anything up to the next 7-8 months.
Okay, till election time maybe.
Maybe non-power prices, maybe we can see, but power sector we are not going to touch even next 1 year.
Okay. So considering whatever, we have as of now in terms of deadlines, in terms of efficiency, well, the long-term target is very well appreciated. Kind of evacuation capability in all, do we have as of now in FY24, and what would be our evacuation capability in FY25?
FY25, this 20 million is we are capable. Here we have to understand whether it is FMC project or whether it is railway line. EC, FC land clearances and the greenfield projects obtaining, the time will be taking. For any forest PT there, we have to project proponent has to apply, it will go to MOF through state. And there is a parallel activities coming. So 850 million FY25, we don't see any difference, 100% it will be achieved.
Oh, okay. So 850 million ton will be having in FY25. But the slides were mentioned that, FMC, this capability would only come to 913 million ton by FY28-29. And given our target of 1 billion ton for FY27, so, that 1 billion ton target is still intact, right? FY27?
That is intact, and surface miner, this minus 100 mm also we are increasing year by year. So that instead of crushing by deploying more surface miners, environment friendly, we are increasing that production also. So directly it can go to power plant. So war wall loadings we are eliminating in a orderly manner with this silo loadings. So the construction time of 1 to 2 years it is being taken. So right now it is 228 million. Within 2 years it may be touching 450 million. And wherever we are, these crushers and silos, where it is taking time, but surface miner production can be directly fed to the power fall and it is also being dispatched. Dispatches, 1 BT is on course. There is no issue.
Okay, sir. Got it. Thanks and all the best.
Thank you.
Thank you. Next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hello, sir. Thank you for the opportunity. I have one question. When we look at the non-power FSA that we have, is it now all moved to the new mechanism of auction-based, or do we still have some old mechanism FSA, which is fixed price based as per the old pricing mechanism?
7 million tons through CPSC. That is there. But prices are indexed. Other than that, we are going through this new tank auctions also will be there. All others are auctions only. Other than this, million ton.
Sure. So right now, of the non-power FSA, how much is still under the old mechanism which can still move to like an auction mechanism and hence lead to higher prices?
We are selling 11 million ton.
11 million. Thank you.
A reminder to all participants, you may press star and 1 to ask a question.
Mr. Natarajan, can you hear us?
One moment, sir. Our next question is from the line of Mr. Rohit Natarajan from Antique Stock Broking. Please go ahead, sir.
Yes, sir. I hope I'm audible.
Sure, audible. Go ahead, sir.
So the railway joint venture that we have with IRCON, I see that there is a slippages of the commissioning date as such. What could possibly be the realistic time frame in which we could conclude the project?
IRCON, in 3 places we are working, more than 3 also. But Shivpur Katodia is on time in CCL. There, you have to understand the state government has demanded land cost along with market rate. So there is bankers problem is also there for getting loans. So we have requested state government, we cannot go on market rate. It should be on this government land rate, maybe agriculture into 1.5 times. That is being considered at Chief Secretary level. Similarly, in CERL and CWRL, that is being taken care. So there are some issues, sometimes it comes up. So by and large, if you see railway projects on deposit basis or this joint venture, it may take 3-4 months this way, that way, but it is more or less in tandem it is going on. The moment this hurdles, somewhere it is forest clearance or this other issues with the state governments. Once it is cleared, the actual laying and other things, the contractors are in place. Only if you make the land available, then the other things will be parallelly it is being executed. Somewhere some minor bridges, major bridges are also to come. Some rainy seasons and peak seasons, maybe 2 to 3 months issue. But as I tell in Jharkhand, the project is on time.
Sure, sir. That's it from my side. Thank you.
Thank you. Next question is from the line of Ashish Kejriwal from Nuvama Wealth Management. Please go ahead.
Yeah, thanks for taking my question again. Sir, to reach to 1 billion ton target, how much capacity is required for our production, for our land acquisition, or for our evacuation facilities to reach to that target? Any ballpark figure will also do.
Every year, say this year 16,500, next year maybe 18 to 19,000. It is around that range, 20,000, 19,000. But once we complete this first mile connectivity projects, after 6 years, for next 4-5 years, it is on that range. Even some coal gasification projects are also has to come. If successful bidder will come, then it will be in this range only, 18 to 20,000 crores.
So my question is not to different projects, only projects which will lead to 1 billion ton of our coal production per year, which includes obviously first mile connectivity. So how much?
4,700 crores in this next 5 years. First mile only. But in railway, there is other works are also going on. So some railway deposit works are going on. Some railway joint venture with IRCON and rights and some local sidings we have to develop. That is parallel activities. Maybe that also per year, if you split this 24,700 say in 5 years, maybe 5,000 crores per year. Similarly, railway also maybe 2,000 to 3,000 crores per year. You will reduce the capacity. And MTOs be in place only, so capex will reduce over.
Sir, is it safe to assume that for next 5 years we can do capex of something like 80,000 crore?
5 years put together. Yes, definitely.
Yeah, 5 years put together. And that will help us in, evacuating 1 billion ton provided demand there.
Even the demand is definitely there. From our side, we are telling it to next 20 years, 15 to 20 years. But for projection side, we are only talking up to 20 years.
Understood. So, sir, my question was that, in next 5 years, we will achieve 1 billion ton target, and obviously we don't want to go much beyond that. And thereafter, maybe we can start moving in a non-coal areas where your capex will continue to be 15 to 20,000 crores per year for foreseeable future, or something else is there in our mind in order to divert it from fossil fuel?
In solar, in coal to gasification, and other thermal plants, that's like MVPL, MPGCL, one more plant along with state of Madhya Pradesh, we are going in a JV, 160 megawatts. Similar things we are also looking after and to diversify and to get other incomes from other operations other than coal.
Okay. The next question is, in one of your replies earlier, you mentioned, I think, that second half, our target for e-auction coal volume is 15% of production. Am I right?
Yes.
So, if I'm doing, because our demand, if it's there, because of which only we are very much confident about the volume growth. And in first half, if you see, we have done only 9% of our volume. So, do you think that 15% of that entire volume in second half is possible for us, or is there demand slowdown which we are facing in the power sector, which will lead to higher offtake in power sector?
It is possible because usually December to March it is a productive months. Demand increasing day by day. Demand has never reduced or never stagnant. It is continuously last 1 month it is peaking up every month.
More than NEP's projection.
It is even Ministry of Power's projections also it is exceeding.
That's the reason, sir, I'm asking, because in power demand is increasing. So can we provide higher volume e-auction?
Yes.
We were thinking it will be lower than that.
We can provide.
More coal to power than the target and options.
Power plants, initially we will meet their targets. We will keep in mind by keeping their targets, and we will be touching this 15% also. Both things we will keep in mind.
Sure, sir. Sure. Thank you and all the best.
Thank you.
Should the last question, please, eh?
Yes, sir. Our next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah, good evening again. Sir, can you help me with the question and the contact details to contact from investors' point of view?
The secretary's name is already there, Mr. Dubey. You can put in that bill. Anything is needed, any information is needed.
Okay. And that mail ID would be, sir?
Yeah, you talk to Mr. Nataraj, he will provide the details. Okay, given there, okay?
Okay. My second question is on e-auction. So what are the different methodology of e-auction that is right now ongoing?
One is for linkage and one is for spot auction.
Linkage and spot auction.
And
dedicated linkage we are there. Spot auctions.
And predominantly the auction volumes is happening through the spot mode, right? More than linkage mode?
Yes, yes. Therefore, auctions mostly for spot only.
And what is the time lag between buyer booking and he actually getting it delivered? And what will be our time period for which we will recognize that revenue? So if booking is done in this month, when will we actually recognize that as a revenue?
10 days we can start it.
We can start 8 to 10 days, and he might take the local clearances from the district mining officer and the director of mines from the state government. 10 days is a sufficient period where he can start the lifting once he clears the auction.
Okay. So when you are telling the recent notified price and e-auction premium over that is 80%, so that would be, say, off to, say, next month itself?
It is within 3 months they can lift it.
Okay, so maximum 3 months. Okay. Okay, sir. That's it from my side. All the best.
Thank you. Ladies and gentlemen, that was the last question of the question and answer session. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, Mr. Natarajan. I would like to thank all the participants for this conference for the H1 results. Thank you, and we hope to meet you next quarter. Thank you once again to all.
Thank you. On behalf of Antique Stock Broking, this concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.